All right, you have begged for it. Whole life insurance versus indexed universal life. I get it. You know what? It wasn't until enough of you emerged, came forward and said, I want to know what you prefer, Kris, that I said, you know what, let's shoot a video on it. For some of you, they're like, what is this? What are these letters? What do they even mean? Ultimately, we're talking about a massive debate in the world of insurance. You know me, I'm a real estate guy, right? So I funnel my money through insurance and then I dump it in real estate. Some people say you should funnel it into this vehicle called whole life insurance, and some people say you should funnel it into indexed universal life. Listen, if you don't know what I'm talking about, you gotta watch the video, stay to the end. I'm about to duke it out with my buddy because I do not agree with him.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
Okay, what's up, Rod Gill?
How you doing, brother?
I wish we could say that we are meeting as friends, but the reality is, dude, I don't get it, right? I mean, I know they're both valid products, but whole life insurance, I've been using it for over 10 years. I put my money in,
Yes.
and then I take it out and I dump it in real estate and I pick up multiple benefits.
Yes.
But dude, this indexed universal life stuff is tied to the stock market. So yeah, it can go up higher, but dude, it can tank and go down. You can lose money.
Well, you could be broken even. You could cap the floor at zero.
Dude, who wants to be broken even? I got my money is eroding right now at the rate of inflation.
Yeah. So for us, when it comes to the IUL complement,
Wait, are you saying us to feel like there's many people on your side when it just looks like it's me? 'Cause these guys stand with me. I'm just
so all you good folks out there. So with the IUL, if you complement it with whole life in certain situations based on your financial
Does
maturity.
that mean you're retreating into my camp right now and you're actually walking on index because you're gonna, pair it up with
Well, what I'd like to do is be able to show all the good folks out there as they begin to step into a different space of greatness.
All right.
Right. And this is a conversation we might have too. Maybe we'll have it live. But being able to use the IUL in times to complement your whole life. If the market's going up 15, 20, 30%, why not be able to grab 8 or 9% on the policy?
Yeah, but what happens when the market goes down?
It's a good question.
No,
It's
answer
a
it.
good question.
Answer it.
Usually depends on the carrier.
Come on, dude. Lay
You
it
have-
out. Don't pussyfoot.
So if the market is down
Pressure,
5, 10, or
pressure.
20%,
Tell the truth.
It'll be down maybe 1%, or you can block it at 0%.
You can put it down to 1% or 0%. So listen, you got to ask yourself, right? Like, I'm just going to tell you where I'm at.
Yes.
I don't really believe in investing in insurance. I just want the benefit of it to help support my other investments.
Okay.
So when you do an IUL, you're basically saying, actually, I'm investing in the stock market. Actually, I want higher, like for me, insurance is an investment. I'm like, all right, I get that. For some of you might actually be, but dude, there's some downside. Don't you want the steady Eddie?
Kris, you are confused, brother. Let me just tell you that right now, because at the end of the day, when it comes to premium finance strategies, and you use index universal life with whole life, instead of doing just estate planning where you put your life insurance into a trust, you can now create a tax-free distribution strategy on your exit from age 60 to 80, 70 or 90 by complementing the IUL with the whole life.
Explain that to me. That's new to me.
Yeah, so when we do some premium finance strategies, you have to have a certain level of net worth. But in that space, the bank pays the premium,
Okay.
right? And the insured pays the interest on the loan from the bank.
You're kidding me.
Yeah, 100%. Right? And if you do that over time, after maybe 12, 13, 14 years, it depends on the product, depends on how you structure it, you have to pay through your cash value the bank back the loan.
Dude, he's fighting dirty right now. I thought I knew everything about this. Right now, I'm actually like, I think I need to learn a few more things. That's kind of cool. I didn't know that. I mean, just in general, though, the idea of having an IUL go back to 0 or 1%.
Yes.
And it's like, I think people have to ask themselves, what am I investing in? Am I counting on what I'm gaining from the insurance company? Or is this facilitating my investment? Or is it some of both? I mean, for me, I just look at everything, all the dividends I get out of my whole life as a benefit, because really, I don't care as long as it's facilitating my investments.
Well, remember, you still get a guarantee on the IUL, right? So there is a guarantee there, except you could tap in on the upside of the market and have protection on the downside. So in the end, when you compare
Well, the
to
guarantee
both,
brings it back to 0 and 1.
yeah, but in that scenario, you would assume that the market's down 10 years in a row and it doesn't work, right? But if you have a market that goes up and down, but it's always trending up, and you have a long-term viewpoint, nothing is short-term, in that space, you can take advantage of the up market. Now, what I will say is I'm whole life. I love whole life first and foremost. But as a complement with an IUL, there's a lot of value in there.
So I just signed a freaking huge double-digit policy on whole life. Should I be adding some index universal life?
The next policy we're going to have the bank pay for. And Kris Krohn will have an IUL policy inside to complement his whole life policy.
If I do, that would mean I'm eating a lot of crow,
And
my
the bank is
pride
gonna
will
pay his
keep that
premium.
from happening. But if the bank's paying my premium,
Yes.
what do you mean by that?
Oh, you gonna eat the crow?
Yeah, no, I'm not eating the crow. I'm curious. I'm just curious right now.
So what the bank will do is, let's say it goes from your average. Let's say your premium's $100,000.
Okay.
I'll just throw that number out there. And now all of a sudden we're gonna buy a death benefit that's $50 million.
Okay.
Because you're that person that's accelerating,
Okay.
or somebody like you. So now all of a sudden the premium to maintain that kind of coverage is $500,000.
Okay.
But you're building, you're building everything that you're building, so you want to dump your money back into your business, but
Right.
you want the proper coverage.
Yes.
So what'll happen is the cash value is collateral
Yep.
to the bank. The bank pays the premium, and they'll do that for 12 years. But now you have the big ticket item life insurance, which gives you the ability to buy all those different Yeah.
Did not know that. Dang, you're smart. You're too smart for your own good. Friends, today we are talking about the difference between
I think
index
we just
universal
got another
life,
policy out
whole
of
life
it.
insurance. I think you did. That last one's costing me like an arm and a leg, but I'm all putting it back in real estate, so it's all good.
But now this one will just cost you interest payments.
No, okay.
Yeah.
All right. So listen, I don't know if you're any clearer right now. I'm feeling like I need to go back and retract some statements and think through a couple other things.
My only concern is when he comes back to me, he's going to come back with bullet points, and we're going to have to take this to the next step.
Probably take it to the next
He's
level.
like, Rob, boom, 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 boom.
Listen, I'll tell you this. I mean, Rob and his team, they clearly know what they're talking about. They're incredibly experienced. It took me a decade to find this team to actually run and own and build and operate all of my insurance needs for my company, and now doing it for a lot of other people as well. So listen, if you're looking for saying, wait, for some of you, you're super savvy and you got what we just said. Some of you went a little over your head. But here's the bottom line. Bottom line is, when you're going to save money and then put it into an investment or an alternative investment, you always have an option of directing it first through insurance, whether it's an IUL or if it's whole. And when that happens, you pick up more benefits. We're arguing about which and how many benefits you want to get and what's the best way to maximize the bennies.
Yep.
And if you want to know, it's ultimately going to be customized to you personally. So if you want to know what that looks like for you, there's a link below. Reach out to Rob and his team. They'll actually do free consultation, actually work up a bunch of options and actually demonstrate what an IUL would look like, what a whole life policy would look like, and ultimately what it looks like to funnel that and leverage that as a vehicle to enhance your alternative investments, real estate, anything else like that.
Can I create one little creative distinction?
Yeah.
So for all the good folks out there, an IUL is not a variable life insurance policy, which a variable is actually, that is invested in the stock market.
Yeah.
It doesn't have any protection from the downside, and there is no guarantee. This is not a variable.
Yeah, well,
this is an IUL.
Now you have a key distinction on that as well. Friends, thank you so much for watching. Hey, Rob, dude, thank you for being here. Thanks you for duking it out. And
He just broke a bunch of bricks yesterday.
Yes.
Wood.
Yes.
I saw that. That
Did
was
you
awesome.
see that?
Yeah, like bang, bang, bang.
So listen, if you're not a subscriber, fix that right now. I'm going to march over to your freaking house and we're going to, hiya. Other than that though, make sure that you smash the like button. That tells YouTube that this is worthy of sharing. Do that, and otherwise we'll catch you on tomorrow's video. Get with Rob and his team. Get financially savvy. We're one phone call away. Make it happen.